Thanks for joining us today on Market Call. I'm Morella Fernandez. Keith Richards on the show, President and Chief Portfolio Manager at ValueTrend Wealth Management. He'll take your questions on technical analysis today. Here's how to reach us. 1-855-326-6266 if you want to dial in. You could also send an email to BNN or Market Call at bnnbloomberg.ca. Good to see you. Thanks for coming in.
Good to be here.
Let's talk about the rally that's going on right now. How do you see it? Do you see it carrying on with what's going on in Iran?
Well, so technical analysts, we look for breakouts. There's a breakout. Okay, so we went through the old highs. It's still going, but there is a little bit of a problem with the market. So this is the yin and yang. The trend is the trend. You can't ignore it, right? But on the other side, breadth is horrible. All right, I read a series of blogs. Maybe some of the people watching read my blog, and I just talked about this the other day. I put together a program years ago that measures risk overall in the market. It's an overall measurement. It's not a predictor. It's just what's your risk reward trade-off. That system went to high risk yesterday for the first time in many, many months. Even through all the Iran thing, that system was kind of neutral. But now it's gone high risk. And the reason is because breadth, market breadth, I don't know if you know what that means, but it's basically the participation by stocks in the market is terrible right now. Like basically it's AI, energy. There's like 2 or 3 sectors, the SOX is moving like crazy. Nothing else. So to a great degree. If you look at new highs, new lows, you look at 50% of stocks over the moving averages like the 50-day or the 200. Nothing is making gangbuster returns except for 2 or 3 segments. So that's an unhealthy market. It can last a while. It's pushing the S&P up, but look at the Dow. It's not pushing that up.
Let me ask you a specific question in that with the indicator that you use, because AI and energy have been sort of swapping places for the past 2 months.
Yeah.
Why is the indicator going to that high risk now when these two have been swapping off for, let's say, 8 weeks?
Well, it looks at a variety of things. So I call it my bear-ometer.
Okay.
And so it looks at trend, it looks at breadth, it looks at market sentiment, like retail money versus institutional money trading. It looks at valuations, things like that, okay? And at the end of the day, it looks at momentum. So at the end of the day, it gives it an overall score. So the overall score, you could get one thing that's not looking too good, but the problem right now is we have breadth not looking good. We have sentiment mediocre. Like in other words, sentiment is becoming too enthusiastic, which is a bad thing, right? Because it's a contrarian indicator. You've got seasonality is not great. You've got, even valuations are kind of questionable out there. So altogether, it's giving it a high risk reading. That's why it's been neutral before.
We'll talk a little bit more about what to do in these circumstances when we come back. We'll take your phone calls for Keith Richards of ValueTrend Wealth Management. He's taking your questions on technical analysis when we come back. Stay tuned. Welcome back to Market Call. Let's start with an email from Christina. She says, hi, could Keith share his thoughts on TRI, Thomson Reuters? Of course, all the software stocks battered for some time. We'll pull up the chart for Thomson Reuters in just a second.
Yeah,
what do you see?
Well, I've got it in front of me here. So it's the classic downhill that seems to be leveling off. So that might be why we're talking about it. And, if I draw my trend line, we always connect the peaks, and that's worked very well. This has been a very smooth downtrend, but now you're starting to see transitions. So you see the low there, and the next low was a bit higher. So we're still dealing with lower highs, but peaks, but we're slightly, I'm going to clear the screen, we're getting slightly higher. This is a little bit too, that's 3 years. So we're now getting slightly higher troughs. So that's what we call the triangle. It's a consolidation pattern. In consolidation patterns can be good. So I would say right now it's like a 6 out of 10, but if it breaks out, if it kind of breaks through this, it would be actually quite bullish.
And would you pick it up sort of if it does break out,
If.
you wouldn't break
Yeah,
it out.
we don't- we
you wouldn't
don't
put in
assume.
money today.
Yeah, there's a famous investor named Howard Marks, and he says, don't predict, just prepare.
Okay.
So that's what we like to do.
That was for Christina. Let's go to the first phone call then. We have Mike on the line in Kitchener, Ontario. Mike, go ahead.
Hi, Keith. Thank you very much for all the effort you put on your blog and on your YouTube videos. And just want to say thank you. A couple of months ago, you sent me a tip on, or you sent us a tip on Target. I picked up on that, made some good money. My question today is about Abbott Labs, ABT.
Okay.
Okay, we'll have a look at Abbott Labs. There is the chart. Also, what do you make of that downward slide?
Well, also, Mike, by the way, one of my top picks is another one of those underloved companies today. So
Okay.
it's like the Target idea. So yeah, Abbott Labs, it's broken down. There was an old support level and it became a new resistance and it's been falling since. I would like to see it settle out before, actually maybe in this case, this is a 1-year chart. Maybe we will go to like a 3-year or something, just so I can, or even a 5-year, just so I can see where the old support levels lie. Because if it's coming into an old, so if we could get a 5-year chart.
Can we get a 5-year chart up?
If it's coming into a support level, then we look for that. We look for it to bounce off of that, and then it can give us some signs. As I said, in one of my top picks, we're actually seeing that exact situation. So here, okay. So see, here's the problem. Bearer of bad news is that this stock has broken, lows from 22 and 23, and it's below that. So to me, I would not be touching this.
What does that mean to you for what it looks like ahead?
Well, it just means that
It could keep sinking beyond that point.
Former buyers that were interested in buying this stock. Let's just pretend this is something like $95. I don't know what the price is here, but let's say it was $95. People would come in and buy it. That's the reason why it would bounce off a couple of days after that point. And it used to be like, in fact, when it fell to that point, buyers would show up and push it up, right? So we can see that over and over. Now $95 or whatever that price is no longer significant to, people aren't going to buy it. They're saying, people aren't saying, I remember when it hit 95 and I want to buy it next time. They're not saying that anymore. So
That was Abbott Labs. Let's go to our next phone line caller is Amy in Toronto. Amy, go ahead.
Oh, hi, Keith. My question is on Transcontinental company. I understand stock was split in 3, and then the dividend yield looks like a 17% or something. But the stock seems to be holding quite well. I just don't know, from a technical standpoint, is the indication the company is doing well? I have listened to your opinion. Thank you.
Okay, thank you for the question. It's a dividend of 16%.
yeah, so that's a clue right there. So whenever you see, first of all, a stock that's just been absolutely hammered and a dividend, that's way above classic even dividend paying like REITs and stuff, then you know that the market is fearful that dividend, in fact, will be cut, okay? So I wouldn't count on that dividend lasting. I don't know, and I don't know the story behind this stock. I'm sorry, but something's happened. I guess I would turn to Craig, my CFA at ValueTrend, and say, well, why is the stock down? But
well, it looks like they're essentially printing company. Is that what
Transcontinental, I think so. Yeah.
Okay, so that's sort of obvious turn of events. No one really prints as much anymore.
Yeah, this is fairly sudden. I mean, this is like 26, just like in the past.
Something
month
new
or so.
has
Something's
changed.
happened.
Okay.
I don't know. And again, I'm being a technical guy. I don't need to know. I asked Craig, but but I wouldn't be looking at this stock at all, even though it looks like it's leveled off. But that old trend has ended, and there's no support levels that it could possibly bounce off of at this point. It may go sideways, but this is one I would not touch.
Okay, I'm hearing they may have had a special payout for the shareholders. Is that a good thing? It indicates they've still got money, obviously, that they want to dish out. Does that still make you worried about the dividend there?
No, I mean, that may be the case, but then again, I mean, the stock, usually, typically, if they think there's going to be a special dividend, and Craig and I have had lots of stocks like that, it goes up by the amount of the dividend in the near term. So it should have done this, but to do this after, it usually will come back down once the dividend is paid, but sort of follow along its merry way. This thing, there's something else going on here. here. I don't know what it is, again, because I'm not a fundamental person. But
Okay, let's move to the next caller then. Jim's on the line. Jim's in Chatham, Ontario. Jim, go ahead.
Oh, thanks for taking my call. I was interested in Stella-Jones. Do you think it'd be a good time to buy it now? And what about tariffs on softwood lumber? Would that affect that?
Thank you for the question. Pulling up the line chart for Stella-Jones, and pretty down for 2025, moving back up again and back down this year. What's your read on that?
So it's a no and a yes. Would I buy it? No. Will the tariffs affect? Probably. That's probably why it's. But this is sort of the old high, and you usually like to see a breakout, but it's got to last a while. I've written some books and done courses and stuff. I always talk about this rule of three. You give it 3 days to 3 weeks to stay on a breakout. Okay, so if you gave this 3 weeks and it held, you might have had a chance, but it broke down, probably because of, again, this is a guess. I'm not a fundamental person. I just look at what's happening on the chart. But what I do know is the trend broke. So in the breakout, didn't last. So that tells me that there's something negative about the stock. I wouldn't be buying it. I'd want to see some sort of support level held. And this looks to me way back in 24, the last support level, maybe around $80 or so. But I wouldn't even look at this stock right now.
All right, let's go to the next caller. Paul's on the line. He's in Orangeville, Ontario. Paul, go ahead.
Yes, Energy Fuel. They're reporting tomorrow. What can you see there? What do you think about buying it now?
Okay, thank you for the question. Having a look at Energy Fuels in just a moment, pulling up that chart. What are your thoughts on Energy Fuels from what you see so far?
We're just getting the chart right now. Okay. Yeah, okay, so looks good. I mean, it's consolidating, so keep that in mind. But, so if we look at the chart, like 25 was obviously a big breakout year. It was kind of stuck in a range for 23, 24, and into the first half of 25. Broke out, and then now we're getting, marginally higher highs. It's arguable that this most recent peak was not a higher high, but it looks relatively on par.
It's close, yes.
Close, and you've got inclining troughs, so rising troughs, and if anything, it's kind of a consolidation right now. Another one of those triangle things that I like. So consolidations, it's, you look as a new buyer. Excuse me, as a new buyer, you want to buy on the breakout. Because you don't predict, just prepare. But if I owned it already, I'd probably continue holding it. And then hopefully it breaks out, then you would have a good case for buying it.
And consolidation can go on for a long time.
That's a problem. So you could be sitting on dead money. And that's why we don't buy in a consolidation, we buy in a and also consolidations can break to the downside. That's always that.
That was for Paul. Let's take a quick break. We'll line up more of your phone calls and your emails for Keith Richards, ValueTrend Wealth Management. Again, he's taking your questions on technical analysis. Back in a moment. Welcome back, and thanks for joining us today on Market Call. We were talking a little bit before the break about consolidation and how long that could last. Can you explain again sort of when you pick up, if something's consolidating, you don't like to pick it up there because it could just move around hardly at all for we don't know how long? Yeah, now there are exceptions to that rule. And if the consolidation pattern has big enough swings, and actually, again, one of my top picks is one of these, where it's got these big moves. So I'm going to draw on a chart, even though this chart is. Can I draw on it before this? We talk about the stock. Okay.
So there's a swing pattern. We start recognizing that there's a point where it moves from and to, and it repeats itself. So then, if there's enough, say this is just pretend $10 and this is $20. Boy, there we go. Then that's a pretty nice swing. Okay, boy,
your handwriting
like a child. Okay, that's true. I was the last kid in my class.
10 to 20, got a swing, got ahead, and so you're picking it up on the upswing.
Yeah. So you're basically, if it's a big enough consolidation swing pattern, it's tradable, right? But if it's like, 5% or less than 10%, why bother, right? So you wait for the breakout.
Okay, let's go to an email then from Deborah. Deborah has a question about NPI, so Northland Power. Can Keith do a technical analysis, please? We'll pull up the 5-year chart on Northland Power and have a look at that and see what it says. And apparently it is coming. There
okay. All right. Okay. Yeah, these kind of stocks are great when things are uncertain. And we were just talking about consolidations, right? And like you said, Marla, things can go sideways for a long time, right? So that's what this has been doing. Like literally, what is it, like 3 years basically that this thing has been going sideways. So yeah, 2 years anyways. So, I mean, is it worth it to play this swing pattern? We were just talking about some of them are so tight, it's hardly worth it.
What are we at? Like 16?
Like it's at
25?
It's at, where is it, $23 today. And it looks like somewhere around 18 is the floor, right? That might be worth playing. Yeah, it's like maybe 20% swings. But, if it broke out, then you have another story because something's happened to cause investors to be interested in the stock. And once a stock breaks out, and I'm not saying this is, you could own it and it pays a dividend. So why not, right? There's nothing wrong with it, but you're not going to make a ton of money on it, especially to buy and hold, because it likes going up and down in this pattern. But if it broke out, like look at this, like you'd probably hit 36. That's to be seen. It hasn't broken out yet.
Let's go to the next phone call then. We have on the line Brian in Cochrane, Alberta. Brian, go ahead.
Yes, good afternoon, Marella and Keith. Speaking of consolidation, I was wondering about Tourmaline Oil. Looked like it had a bit of a breakout and false breakout and went back down to support, and just wondering how you feel about the stock moving forward.
Okay, maybe in this case, I'm going to go back to the 1 year chart. So
okay.
If I could get the 1 year chart. Because we own Tourmaline. So we owned a couple of gas stocks. And one of them, thankfully, just got taken out by Shell. It was ARX, Arc Resources, right? So we suddenly made 20% in a day. Well, yay.
Sure.
We took it. We sold it right away, right? So it was in the same pattern. So, we bought Tourmaline somewhere near the bottom, and we wanted to sell it somewhere at the top. It's starting to approach the top. And quite frankly, this is where Craig and I, he's the CFA in our company, he and I will sometimes butt heads, because I'm this technical guy going, there's got to be a good reason for this thing to break out, for me to hold it, because it's so many times failed, like right here. Why would I hold it is what I'm going to be telling Craig probably in the next week or so. So we do own it. Craig and I might get into some fisticuffs and come out a little bit scratched. But
what's his logic as to?
Well, he's a catalyst guy, right? So he's looking at, there's a catalyst for this to come out, like for the gas companies to break out, and there is, right? It's called the RAN. Like it's, there's the blockage of the strait affects everybody. So there's an argument that could be made. I know that's the argument that he gave me when we bought it, and I said, well, great, like we buy it down here, I'm happy to buy it, right? So this is where he's going to have to convince me. It's a team, right? We both make our things together. So he's going to have to convince me that I should hold it, because at this point, I'm going to get itchy to sell it in the next week or two.
That was for Brian in Alberta. Let's go to the next caller then. Tyler's in Toronto. Tyler, go ahead.
Hi, Marilla. Hi, Keith. Thanks for this. Keith, you mentioned at the beginning that technology has been hotter than hot right now. But I was wondering, would you ever consider buying a stock in technology, specifically right now about technology, that may be due for a correction, even though the stock looks good? I'm looking at CrowdStrike, CRWD. There's a lot to like about this one right now. It just pierced its 200-day moving average after being beaten down for so long. We have higher highs, higher lows. MACDs on daily and weeklies are looking up. Relative strength on daily and weeklies are looking up, still within a Bollinger Band. There's lots to like about this, but my fear is that general technology sentiment could backfire, and this could bring it down. Specifically about CrowdStrike, or in general, would you ever consider a stock within a too hot to handle sector, and how does CrowdStrike look right now? Thanks.
Thank you for the question. CrowdStrike in cybersecurity, so that side of things, not necessarily in one of the hyperscalers or and there are some concerns about cybersecurity moving forward with AI. When you look at that chart, how do you read it?
Well, so okay, and Tyler has probably been reading my books and reading my blog, because he's speaking my language. Craig and I actually took a bet a while ago on a software ETF. We have our main equity platform, but then we have this, what we call our aggressive platform, and we have like a fraction of the assets in that.
How long ago did you decide to put in for software?
Just a couple months ago. Okay. It was very recently.
After it had already fallen.
Yeah, it was oversold, and we're just looking for a bounce. So just keeping in mind that, to your point, Tyler, like you can play anything on the near term, but if you're an investor, it's a different story. So we're not investors on software. We're just trying to play it. And that's why we only do it in our aggressive platform, not in our investment platform. So it was making higher highs and higher lows. And then there's a lower low here, right? Now it is moving up though. So that's good. And so there's a decent chance it could hit its last high. And
so the lower low, would you say that's 350 on your chart?
Yeah, let's call
Roughly?
it that.
Okay.
Sure, yeah. And again, if we maybe 1 year chart, it might be helpful here. But so just keep in mind that the trend is iffy, but the move, it's going up right now. So here we go. If we look at the daily chart, you can see there is a little consolidation on the daily chart, or on the short-term chart, I should say, and it broke out. And this is why, it's okay right now. It's got to get through this neckline here, okay, which is about 490. You can see there's a whole cluster of, remember, these movements, this is buyers. Buyers were buying it here, right? And sellers were selling it there. So there's going to be some sellers come in at whatever that is, 490. And then if it breaks that, then very well could see at least into this zone, which would maybe like $500. So I can see why Teller's interested in this stock, because it could be a good aggressive play. That's what I would call it. Right now, it's hard to say it's a long-term play because of that lower low on the big chart.
But he's got to watch it if he's putting money in and see where it breaks next.
Yeah, that's right.
Let's get to the next caller then. We have Jeremy on the line in Red Lake, Ontario. Jeremy, go ahead.
Yeah, hi there. First-time caller. I was wondering if I can get Keith's opinion on Magellan Aerospace Corporation.
Thank you for the question. We'll pull up Magellan. You want to see the 5-year on that, or?
Well, the 5-year looks good. I can right off the bat say it looks good. So look, this is one of these. There was a long time ago. I learned technical analysis from probably the greatest technical guy out there around, is Ralph Acampora, and I went and I spent a week with him. Went to lunch with him. It was amazing, and he's the guy that convinced me to get my CMT, by the way. So one of his favorite things, one of the things that got drilled into my head, he said, whenever you see these big long bases and then a breakout, you are in for a rocket ship ride. And to this day, that was probably 30 years ago that I met with Ralph. And to this day, he was absolutely right. Whenever you get a breakout from these long bases, greater the base, the better the case, as they say, then you get big moves. And look at this, it's choppy. It's not a smooth ride, but higher highs, higher lows. What's not to like?
Let me ask you, for a breakout, for you to call it a breakout, how do you determine that it's a breakout? Does it have to go up to a certain point? Does it have to sustain? What would you refer to as a breakout? Yeah,
so I mentioned earlier, I've written some books and courses and stuff. And this cardinal rule that I present right near the beginning of my books and courses is the rule of 3. So if you get a breakout, because I love breakouts, so if you get a breakout, minimum 3 days. So if you're like Tyler, the last caller, and talking about a short-term move, 3 days, you need the breakout for 3 days and then you can trade it, right? But if you're an investor, maybe wait up to 3 weeks. Doesn't have to be 3 weeks. You got to use some judgment. But 3 days to 3 weeks, once it's past that, it's a real breakout. Craig and I usually will buy on the 1 to 2 week area on a breakout.
Okay, good to know. Let's move on to I'm not sure if this is Gabrielle. Is it Gabrielle in Aurora? Gabrielle, are you there?
Hi, yeah, I'm here.
Go ahead. What's your question?
Hi, thanks for taking my call. First-time caller, but big fan of the show and Keith's blog. So the market breadth looks pretty narrow right now, to Keith's point in the beginning of the call. I'm looking for a short-term trade in some less crowded areas. Was wondering if Keith can give his technical take on Modine Manufacturing Company, MOD.
Okay, we'll have a look at Modine. So they do heat storage and transfer for technology.
Yeah, I mean, again, it's bigger term picture is good because it seems to be, on a choppy uptrend. It's not afraid of its, but that was probably what do they call it? The Liberation Day or whatever that was. And then, but it's had a nice move. It's kind of arced off of a longer term trend line. If we look at the 1 year chart again, that might help. But it looks a little parabolic right now, but that doesn't, everything's parabolic when there's the movers are moving, right? If you look at oil, you look at tech, they're all parabolic. So this is okay. So this is really good to see because this is why you have to drill down a little bit. You look at the big picture and then you drill down. So there we see a nice little breakout. Okay, So this would be like a daily chart in my world, a short-term chart, and you can see the breakout. So far it looks good. Like, I would, if you're in the story, then stay in the story. The breakout probably suggests it's going to carry on.
Okay, and I'm trying to determine the timeline for that breakout. How many days would you say that is?
That
is that several
maybe
weeks?
only looks like a few days.
Okay.
So it is early, but this is where we start to get complicated. But if we see a neckline breakout and then it fails, okay, then you start counting again, and you give it a few days to because it could just be a spike, right? But if it like this, okay, it fell. Well, you counted and counted. Okay, this is real. I'm out, and then you would have avoided this, And then this is really short-term stuff I'm talking about.
Sure.
But you have what's not physical stop losses. Read my books. I won't get into why you don't want to do physical stop losses, but you can do mental stop losses. This is where I say uncle. So if you trade like that, you can make money in short-term moves.
Okay, let's take a quick break. Then we will go through some past picks from Keith. When we come back, stay tuned. Let's go through some past picks for Keith from March 3rd of this year, so a little over a month ago, 6 weeks, we'll say. At the time, he chose Brookfield Infrastructure, BIPUN, on the TSX, 53.71 to 48.47 today. So 8% downside for return, 8% for total return downside. What's going on with Brookfield? You would imagine these infrastructure companies doing well at a time like this. So what would you say is weighing on the stock?
What was it? There was so Craig phoned me up with some news. We're selling it, by the way, because it's just broken down, and we're okay.
We're not interested in.
We're not afraid of selling positions. We leg into things, so we did a 2% move, and now it's probably a 1.5% of the portfolio. It happens, right? So it was they were. I'm sorry. As a technical guy, Craig phoned me and said, "This is what's going on." And I'm like, "Yeah, whatever," because it's breaking the chart, and I got to get out. So it's.
When you looked at it, what did you see?
Well, it was. I think it was going back to March. It was like, oh look, it had retraced to an old support level, like something like this, and it was I think it was showing some signs of life. I was probably buying it right here.
The latest low was, let's say, 48, a little under 48. Is that what I'm looking at? Yeah. And then when was the last time you saw that level? I'm trying to look across, but I can't really make that.
Well, it's, there are support levels that it could be bouncing off, but the problem right now is it's just a bunch of lower highs and lower lows. And we were trying to trade this. I think, it had made a high, it had retraced, it had bounced up. We said, okay, it looks good. And then it wasn't. So we're not officially out of it. We do hold it, but I wouldn't recommend buying it right now. Let's
get to your next past pick for March. Atkins Realis, ATRL on the TSX, a 96.91 in March, 96.02 today. So it's down 1% return, total return. What is your look at the chart, and are you holding on to the stock?
Yeah, we own it. We own it, and we like it. It's anything that's not tech and energy, is not up right now, but it's fine. It's got a support level. We originally bought it around the support level. I think it was going back like the end of last year or beginning of this year. We think, it'll at least get up to its high end easy enough, especially when the market starts moving into other sectors, which is what we're hoping for, because the breadth right now is so bad that either if it stays like this, then we have a very dangerous market, like my indicators suggest. But if it does start rotating into everything else, then we'll probably see stocks like this, which are great stocks, great companies, go up.
Let's get to your third pick from March. Archer Daniels Midland ADM in New York, 67.99 to 80.73 US, so 19% upside just in the last 6 weeks or so, 19% for total return. It's been 2 months, actually. I'm off with my math. But can you tell me a little bit more about what they do? It's sort of a fertilizer. They support agriculture?
Actually, they're not a fertilizer. Archer Daniels is a food processing company. So they're actually involved in the commodities markets because of their exposure to food. But what they do is they produce flour products. They take the raw material, like wheat or whatever it is, and they make oils, like out of seed oils. And again, you have to talk to Craig to get the full story. But we bought this along with other commodities like the energy stocks because we like hard assets right now. Inflationary environment equals hard assets. We've been buying hard assets pretty aggressively for the past 2 years. We started off with gold, bought in that wonderful breakout around 2,500, and we reduced it. But we like all the hard assets, and this is an ag play, an agriculture play. So we like it for that reason.
Let's take a quick break. Then we'll come back with more of your phone calls and your emails for Keith Richards. Stay tuned for that. Welcome back to Market Call. Let's go to Hugh on the line in Ottawa. Hugh, go ahead.
Yeah, good day, you guys. I'm looking at open text, OTEX. I'm looking at a 2, 3, 5 year charts, Keith, and the trend is ugly, but it seems to have a really nice upper and lower channels, and it just looks like it's scraping along that lower channel right now. So I'm wondering if it's hitting some of your points to trigger off a buy.
Okay, we talked about software a little bit earlier. Have a look at OpenText. What do you think?
Yeah, anything in this area is okay for a possible short-term oversold trade. But if we look at, this is a 5-year chart, and I like this chart just to illustrate that it has broken down. So its long-term pattern was, it would kind of get down to whatever that is, $35 or $30, whatever it was, and it would decline. It would sort of bounce off of that and maybe get into the $55 area, and it did it again, and then it fell, and this time instead of pausing out, it just broke right through. Now we were just looking at the 1 year. We don't have to look at the 1 year here. It is consolidating a bit, so it may stocks sometimes will consolidate, like this little thing is a consolidation if you looked at a short-term pattern, and it may get up to that old former low that we call new resistance, okay? Is that worthwhile for most investors? No, but for a short-term trader, sure it is.
So he's looking at a longer term, so not necessarily.
Yeah, I would not until it broke. Now, so if it went back here and broke above that, I would buy it. But as a trader, I wouldn't yet.
Let's go to William on the line in London, Ontario. William, go ahead.
Good afternoon, and thank you for your book. It's very interesting to read. I want to know if I should add to my Aecon holdings or BDT Bird construction holdings.
Okay, thank you for the question. Do you want to do Bird first? Have a look at Bird. Oh, Aecon's up first. Okay.
Okay, Aecon, yeah, and we own this, so I have to disclose that. And we don't hate owning it.
It's done well.
It's done well. So, what's next? I mean, it is one of the stocks that's moved fairly aggressively. It could pull back a bit just because it's overbought. I'm not selling it, so we don't sell unless there's a genuine reason, but I will not be surprised if this pulls back because it's kind of overbought, and that might be a good opportunity for buying it because we like the story. We're always, we talk about bases. This is what's called a cup formation. When we first started buying it, I think I was on the show a year ago or something and talked about it. I might have talked about it a couple times since. So there's a cup, we call that, there's a breakout, a handle comes right back to the old cup and then moves, right? So this is classic technical analysis, and it indicates that you're probably in for a good ride, but it's overbought. So that's my 2 cents worth.
Can we get to Bird quickly just to do the comparison there for Bird construction? There we go.
Yeah, there's another. So this is interesting because this guy was moving sideways, and look at the lid. If people think that these are just lines, no, these are people buying and selling, and institutions and sometimes programs. But there's a legit breakout. In fact, it kind of arced and then boom. As soon as it broke out, look at the angle. Okay, so is it overbought? Absolutely. I can tell just by looking at the chart. But breakouts be breakouts, right? You don't argue with breakouts too much. If you're new to the stock, you don't own it, it might pull back. You might have a great entry point. But the fact that it went sideways for a year and then broke out, greater this base, the better the case. There's lots of good case here.
Let's get to our next caller before the break. Don's in Beaverton, Ontario. Don, go ahead.
Good afternoon, Keith. I always enjoy your blog. My question today is on WFG. I'd like your opinion. Thank you.
West Fraser Timber pulling it up now, probably in a harder space with everything going on. We'll have a look. Okay.
Yeah. So, we were just looking at another one of these lumber stocks a while ago. It's struggling because it had a range and it kind of looked like it was breaking out, and then I guess along came that whole tariff thing. So this was the trading range, and I would have happily, I would have been fooled here by the breakout because it looked pretty legit. But then it broke down, and Craig and I would have stopped out. I can tell you that right now. Like, we would have just sold it because those are our rules, right? So I, however, would have been interested on this bounce to see if it would last. It didn't, and this is why we use those rules that say 3 days to 3 weeks, because this bounce did not last, even though the last times it did that, they turned out pretty good opportunities, right? So I think that the fact that it's broken a long-term support level, and it's even breaking sort of, or it's at least playing with a fairly recent support level, I would not be buying this.
Let's take a quick break then. We'll get back to your phone calls and your emails in just a moment. Stay tuned. Welcome back. Vahid's on the line in Victoria with a question. Vahid, go ahead.
For taking my call. Hello?
Yes, go ahead.
Thank you for taking my call. I would like to know Keith's opinion about Lightspeed. I bought it when I was too high. Then it was too high, 92, and now it's 12. Should I sell at a loss or wait until it come up? Thank you.
Okay, let's take a look at Lightspeed.
Okay, so this is a 3-year chart. We were looking at a longer chart, and it's been kind of going nowhere for a long time. But what's interesting on the 3-year chart is that there was a support level. It broke. And you can see that, again, old buyers became, sellers. It broke, and it never returned, and it tried making a jump at it, and that became resistance. So rule for readers or viewers to remember is old support becomes new resistance, okay? People remember where they bought, so they just want their money back. So it's been failing there, and it's pulled back. I wouldn't own this stock right now.
Okay, because he bought in at 19, would you sell?
I think it could get to the top of this range, maybe. There's no guarantees, but maybe $17. But I wouldn't,
Let's go to Michael next on the line. He's in Montreal. Michael, go ahead.
Hi, good morning. I have a question for a long-term portfolio. I'm looking at McDonald's. This has been one of our world's greatest companies, and I'm looking at it. I'm asking, what are the risk rewards in getting in right here, right now?
Okay, thank you for the question. We were looking this up a little bit earlier, and it's done that sort of deep dive in the last month and a half. Is this something you've ever invested in, a stock like McDonald's?
Well, we don't own it right now. I've 40 years of trading. I've invested in a lot of stocks.
Sure.
But McDonald's is a stalwart, except now. I actually don't know the story. I mean, I was just listening to how they're going to transition using AI and use robots to flip hamburgers in the future and all this stuff. It was a really interesting presentation on McDonald's. And then, but the stock has plummeted. I assume this is because, this is an assumption, I don't know. But generally when things are tight and inflation is high, people spend less money on, Domino's and McDonald's and stuff like that, right? But the trend was good. It's broken. For that reason, right now, I couldn't buy it. But I agree, it's been a stalwart stock to own. If it recovers and gets back over that line, I'd be all over this stock, but that's to be seen.
Do we have time for one more caller? We can try and get in the caller from Ottawa. Sorry, who do I have on the line? Anne, are you there?
Yeah, hi there.
Hi, go ahead.
There. Can you hear me?
Yes, go ahead.
Yeah, hi there. Thanks for taking my call. Can I get your guest opinion on Palantir? Is it kind of building a new base, or is it still trending downwards? I'll hang up on this answer. Thank you so much.
Thank you for the question. Pulling that up.
Let's rip through 2 charts. The 5-year chart right away, and then we'll go right to the short 1-year chart. Downtrend. But the viewer's asking, is this basing now? So it's in a downtrend. Let's take a look at the 1-year.
Okay, pulling up the 1-year in just a second.
3, 2, 1. Okay, we still don't have it.
Nope. We're getting up the 1-year. Trying to get up the 1 year. There we go.
Okay, all right. My old line is still on it. Okay, so so again, we're into that whole question of are you in the long term or short term view here? Because in the long term view, the current trend is down. Is it basing? maybe. So how's that for a definite maybe? It's really just trying to do this, and that's okay. That's a good thing. But I would want it to prove and break out, because see that old level there? That's where its resistance is now. This is repeated. You'll see old support over and over. It becomes new resistance. So I would say give it a wait.
Let's take a quick break. We're going to have new top picks from Keith when we come back. Stay tuned. Join us tomorrow for Market Call. Kim Bolton on the show. President and portfolio manager at Black Swan, Dexteritas. He'll take your questions tomorrow on technology stocks. Let's get to some new top picks from Keith Richards, starting with Peyto, PEY, on the TSX. What do you like about Peyto?
Well, we've owned it for a while, and it keeps going up. How's that?
That's enough.
And why I put it on the top picks today, I might have even put it in the past, but it's pulled back. And this trend line, if we looked at a longer-term chart, we can, if they can flip up a 5-year chart or something. It's been this forever uptrend. And so anytime it pulls back to the trend line, you just buy it. So, it was in a gentle uptrend. Of course, the whole both
space
inflation
has moved off,
and,
yes.
and oil and all that. But it's pulled back to the near-term trend line. We like it here.
Would you buy more? Are you buying more here?
Yeah. Well, we have a fair amount.
Okay.
We kept buying it on the way up. So, but I would add more, yeah.
Okay. That was Peyto. That was quick and easy. Let's get your next top pick in. Mosaic. MOS on the New York Stock Exchange, essentially fertilizer.
Yeah.
Do you like that right now, or is there a longer-term reason for this?
So so one of the viewers, I mentioned that I was going to talk about a stock that's more of an opportunistic trade. So actually, I want to look at maybe a 5-year chart, okay, or even a 3-year chart. I don't care. But what I want to show you here is, these charts aren't very logarithmic, but there's kind of a base on this stock. It's actually, if you look at it, actually I'm going to ask for a 3-year. I'm really fussy right now. If we got a 3-year, I could probably show this base a little easier. And it's been a real pattern. There we go. So it really likes to bounce right now. It likes to bounce off of this level of around where it is right now, around $24. Now, it's just kind of on the verge of breaking that, so we got to watch it. But we're saying that, look, I mean, the space itself, if you look at Nutrien and some of the other competitors, they've gone up. This is not as well a managed company, okay? So I'm not buying it because it's a quality name. I'm buying it because we think it'll play catch up to, not the stuff you put on your hamburger, but it'll play catch up to the group. And it's an agriculture kind of stock, right? And look at what's happening with the fertilizers, potash, all that stuff coming over the strait.
Okay, so Mosaic there. Let's get to your next pick. George Weston, WN on the TSX, owner of Loblaws. Is this sort of your defensive move here?
Yeah, totally. It's a very boring stock. So I'm not saying that you're going to make a lot of money on this stock, but because I mentioned that we flashed danger, my system is suggesting high risk. I'm trying to find stuff that's a little bit more stable, and this is one of our moves into the more stable. We like the hard asset stuff, but we also like the George Westons and
because you're talking about it being a riskier time. Are you looking at other stocks that are defensive as well? Is this your first move, and there'll be others
Well, we
aligning?
got tons of cash right now, so we got 25% cash.
Why are you sitting on so much cash?
Because we see it's a concentrated market, and we're just not interested. Like, we hold lots of commodities; they've done just fine, right? But we don't see any reason. Look at Warren Buffett. Well, no, Buffett's out. It's now Greg.
Mr. Abel, yes.
Abel. But they're still selling. Like, they're still raising cash, and it's not. They don't think there's value out there. We kind of look at it the same way. It's like if it's a one-trick pony, which is what this market is right now. Well, you can buy a little bit of tech, but you don't want to overload in that, because when the
tide turns,
when the tide turns, you're going to be in trouble.
It really turns. Okay.
So that's why we're kind of holding cash. We're just looking for opportunities.
Okay, I'll leave it there, Keith. Thanks for coming in as always.
Good to be here.
We'll see you again soon. And thank you for joining us today on Market Call. We'll see you back here again tomorrow.